Morning. It is Brian here over at the Art of Startup War. You know what's coming. It's always the same. I bring in only the finest vintage entrepreneurs, companies not that we are promoting or that we like, companies that we have invested in and we love. And during this interview, stroke podcast, stroke digging into everything, you're going to hear me go through the same process that we at Expert Dojo went through when we were investing in the company in the very first place. So, as anyone who's considering investing in the future in companies, or maybe you are an established investor and you would just like to cross check diligence in a very interesting and entertaining way, then that's what we're going to do for the next 30 minutes. And you're going to watch a unicorn being built in the making. So, first of all, let me welcome Adeshina to the show. I know Adeshina well, but I'm going to welcome him to meet all you folks, all you fine folks out there from Trade Lenda. Good morning.
Thank you
Good
very much.
evening, actually, right?
Yeah, it's evening over here.
It's a
Have you?
beautiful day. And we travel all the way to Africa, which is wonderful. And for those investors in Africa, it's not a big jump. And for the US, you will be hearing today what you're hearing from me over and over again. Ignore phenomenal companies growing quickly in Africa at your peril because there are incredible growth opportunities with this phenomenal region with over 1 billion folks living there and not a million miles away from being 25% of the entire human population. But today, we're not just going to talk about Africa. We're going to talk about trade lender and we're going to talk about how it started, how it's going to evolve, and where it's going to go in the future. So, Adeshina, do you mind just taking us back to the beginning when you first started off the company and take us to the genesis of the idea and why this was so important to bring to the world?
All right. Thank you very much. So Trade Lender was bettered from, an experience we had, looking back to 2020, where we were supporting small businesses to be able to have access to market. It seems like that was the major challenge, but with the pandemic, we later discovered that it wasn't just about access to market, being able to triple their sales. It was their ability to be able to timely get inventories to be able to sell to these customers. And when we dug further, we found out that they actually did not have credit. And this is actually very crucial because this is one of the reasons why it seems like e-commerce has not been able to survive within our landscape. Because when there's an order, these small businesses have to rabble up and down just to get money, to be able to get inventories, for them to be able to stock up and then sell to the customer. It therefore takes 3, 4, 5 days and unending time for the customers to be able to get it. So we sat down one day looking at the numbers and we said, how can we be that bridge for these customers to be able to get timely credit that would turn out to be inventories, and then they can then meet up all the demands that they actually have. So this is how Trade Lender was vetted.
Wonderful. And is this throughout Africa or in specific regions? Like, did you see the one region particularly worse than another? Or is it also, and I would also ask, is this something more recent because just of the explosive growth of trade and industry in Africa, or something that you've seen for a long time, but it just became very obvious to you in 2020?
Okay, so this is actually a trend that has always been. Looking back to 30 years ago, I grew up with a mom who actually could not grow a business more than her savings. She used to be one of the top retail sellers for one of the major distribution companies in Nigeria. But every now and then she has to just rely on her savings. 30 years after, I've worked in the bank, I've experienced, what it means, to be able to give credit, to bigger organizations and how they are able to scale. And I'm still then faced with the same challenge, supporting other small businesses, which reminds me of my mom. And still, they are not able to grow, they are not able to scale beyond what they actually are doing. But it's just quite interesting that since we started, we've seen some of these small businesses who have now been able to move from just one outlet to 3 outlets within 6 months. So it just shows the impact, that credit in terms of inventory finance and invoice finance can actually do for these businesses to be able to move from where they are to where they want to be.
You know, it's an interesting thing. It's not just in Africa. I was having this conversation with somebody over here in the US the other week as well. Understanding and being educated in the forms of finance is so incredibly important. And most of us are not, right? Most of us, we do math, we do English, we do history, we do geography, but nobody teaches us the actual massive importance of really understanding the impact of finance on our personal and business growth. And you have so many great companies that are sitting in environments whereby they have customers that want to buy what they have. They're doing really well. They can't grow and they're caught in this constant cycle of, I don't want to say poverty, but it's just getting by, right? And survival, even more than poverty, where they don't break through. And finance really, when properly applied, is the key to everything. Now, one thing is realizing this, and I think everybody on this call would say, "Yes, I'm with you." I could see how that is another a huge problem. Another thing is implementing the execution to actually build out an entire finance infrastructure that is going to solve the problem for the SMB space within supply chain. How the heck did you do that?
So looking at this space is a very unique space, especially when you look at it in Africa, knowing fully well that this set of small businesses don't even have existing credits lines that you can check to be able to access them. So what we did was to leverage first on our experience. I used to work in the bank with Stanbic IBTC. I worked in both the asset management and also the bank, where I led everything about payments and collections, and also the innovations for the direct debit, which really puts the mutual funds at over 200 billion US dollars in assets under management. I also knew that I couldn't do it alone, so I attracted the right co-founders to join me on this journey. My other colleague Shino Arogun, that they used to work with UBA, where he wrote credit policies across 20 African countries. With that, we knew that we could tailor down some policies that can help us be able to leverage and then underwrite these people more efficiently than what others were doing. So we set up a framework, and then we knew we didn't want to be manual. We wanted to be a digital, solution. So we looked for our CTO, who is also a co-founder and has worked, passionately, for the private and the public sector with various technology innovations. And he then, automated that process into an algorithm, which today we are using to be able to scale and support these businesses. Now, what our technology actually does is it doesn't look at what the regular people look at. Yes, it still picks the financial aspect of it, but it actually focuses on the promoter of the business,
Mm.
assessing their character and their capacity to be able to repay back. And most people out there might say, "Oh, there are a lot of companies trying to solve, credit." We are actually very unique because we've created a solution that through our APIs within the next few months, 18 months to be precise, we will be able to plug into manufacturers, and they would then be able to manage how effectively they're able to give credit. Today, especially in Nigeria, most of these big companies who produce these fast consumer products actually also want to give credit, but they don't know how. And even when they give, their trade payables are usually quite, ridiculously, crazily, bad. But with our APIs, they would be able to offer more credit, inventory financing for these small businesses, and we're in talks with them as we continue to scale and help these small businesses to be able to grow.
And was this your big insight at the beginning that it's not so much just improving the credit process, it's connecting the dots for the credit process? Because the challenge I think with credit generally being given in most places is that it's very siloed. I give credit to you because I know you because you apply because we do it. You know, somebody else will give credit to someone else. Somebody else pays back. That information is kept in a different place while actually allowing the manufacturers to get involved and providing them with the information that allows them to make the right decision making. Is that the major genius behind what you've done? Or were there other areas as well?
Yeah, so that is one aspect. But what we are also doing today is we're also helping the unbanked, small businesses who before now have been left out, excluded, to
Mm,
be able to have access to be able to perform their transactions. So typically, one of the reasons why they are also not able to be helped by the traditional banks, is, apart from upfront collateral, which those legacy banks ask for, is because there is no history. We today are able to help them to be able to have history, because they can perform transactions on our platform. We can see what they've done. We can see their capacity, and then we can match, additional, funds on top of what they've done, based on 50% of their monthly, average turnover. So this is one of the extra things that we're doing for them. And with that information, we're then able to then go further to layer on other financial services on top of, credit. Today, these small businesses are still excluded in terms of insurance. They're excluded in terms of other micro, savings, and several other, financial services. We're able to partner with people who do this, and they're able to support these businesses, aside from what we provide for them.
Very powerful. Now, one thing, and you have, and actually, let me back up for a second. Fellow investors, execution and track record of the founder is probably the heaviest weighted thing that we actually have. And so for us to be able to see Adesina, not just him, but also his co-founders and his colleagues that he was bringing through with the deep financial background, it moved this from a social mission to make sure that trade and credit and just business in general can be done better through a better access to credit and finance, through a smarter system, to a implementable and executable plan that could be done based on their track record. So for us, that was like a huge thing. But talk to us a little bit, if you can, about how you went from taking your background, your strength, your execution power, this great idea that you had brought, and now building it and paying to build it and convincing a team to get together. That initial stage of the hero's journey is always the hardest stage, because that's the moment where you you step off the cliff and you hope to God there's a parachute on your back.
Yeah, so it's been an interesting journey. So I previously founded One Kiosk, and One Kiosk was basically, providing them with access to market. And we took these small businesses, from zero to some of them doing over, $100,000 monthly on an average. In terms of our GMV, in 2020, we were doing over $1 million in GMV every month, which means that there's actually a market. People are ready to, support and buy from these small businesses. But the challenge is, can they meet up with, the average requests and demands that the market actually has for them. So by 2021, we got talking, and this was a very crucial time that we needed to be able to solve this gap. So one of the things I strongly believe in is not going alone. I constantly meet with strategic advisors, who are part of the business. Some are angel investors, supporting us. And I had this particular, advisor, who is also an angel investor in the business today, who we sat down one of those weekends and we're talking, and he said, see, we need to solve this problem. This is a big problem. Yeah. Yes, we've been helping these small businesses before now to get access to market and all that. But without solving this other one cannot move. And that was when it dawned on us that, we really need to do this. But one of the beauty part of it was, he didn't stop at just, suggesting, as part of our conversation. He actually now invested, by putting his cash to say, let's do this. And for me, I always look out for the best of people to attract. And that's why I went back to, discuss with my other colleagues, who were still working in the banks then. They had to resign from the bank. She now we bear the same name, so we call ourselves S Squares. He had times from the bank, and came on board, to kind of drive this. And we also spoke to Tosin, who also resigned, and that's how we actually got together to start the business. So it's been
Wonderful.
quite an amazing journey. At first, it wasn't all smooth, because we needed to validate with what we had, and then build a pipeline. But with the right support, with the right people, we were able to get a lot
Ta
of
Talk to us about that. Bring us back, 'cause always at the beginning of the hero's journey, it's the most challenging part. You give up your job, the 3 of you give up your jobs. You, like, end up sitting at home and you're thinking, "Okay, we're gonna build it, it's gonna be fantastic, it's gonna be great." But then you have all of the trials or tribulations of people not quite performing, folks not quite helping as much as they're supposed to, other people surprising you with a tremendous amount of help. Talk to us about some of the more difficult periods at the beginning, especially as you were building out the product and you were trying to make it perfect.
yeah. So it wasn't really about the beginning part wasn't about the product. It was more about how much we could turn over at the beginning stage. So at the beginning stage we had pipelines of just about 50 thousand US dollars initially to disburse out, compared to today that we have access to over 300,000 plus to be able to disburse out on a monthly basis. We had just 50,000. So when we started out, that was generating quite very little interest, which meant that we as the founders, we needed to keep it lean compared to where we were coming from, and we needed to go by the day and responsibilities and obligations. And well, perhaps since this is also the show, to be real and to be truthful, as of December 2021, to be able to keep the business running and to be able to keep my family going, because I strongly believed in the vision and we were still pushing, I had to, drive, taxi, like use my car to be taxi when I
Well
close
done.
my day, to be able to make sure that my family, are able to survive. It was quite an interesting time, but one of the things that kept us going.
By the way, just on that point, this is the difference between great entrepreneurs and people who go through their life just looking to make it through to the next day. This is the difference. This is the moment where you say, "How important is this? I'm going to show you how important this is." I just worked out how to get another 12 hours of my day because I'm not going to sleep. I'm going to do my same 12 hours driving and building the company, but I'm going to add another 12 hours so I can bring the money in, because you do what you have to do at the beginning to make sure that you can follow through with what needs to be achieved. And that's what we liked in you the most, was the fact that you were prepared to go that extra mile to make sure you got it out. Because at the beginning, you're not deploying enough capital to be able to get the return. You're making sure you're testing out the money that you have. And so while you were testing out deploying that $50,000, what did you learn? Both good and bad as well.
Yeah, so one of the things we learned quite quickly, because we actually did not start out, to helping them to be able to have, transactions and all that. We found out that a whole lot of them actually were unbanked, and for us to be able to really support them, we needed to have another layer to be able to give them, a place whereby they can perform their transactions, and at the same time, we also needed to be able to focus on helping them to be able to get these inventories. We started first, giving them this credit within 24 hours. That's what we started out with. And we found out that even the 24 hours prices of inventories actually change. And once there's a disruption in the price, then everything collapsed. Because if a price of a goods was $100 and now is now $150, and they had planned to get $100 from you for this stock, then they obviously cannot meet up, and they've told the customer $100 or maybe $120. So we needed to bridge that part, and that's when we started discussing. First, we built a platform, that allows them now to be able to transact, and then we also then went further to start discussing directly with those manufacturers, those fast consumer moving manufacturers, who can then make sure that they get this product on time. So today we are connected with major distributors across various verticals of the fast consumer moving products, and we are then taking it a step further within the next few months to then have direct relationships with the companies themselves.
Amazing. And then so as you built that and as you built out the technology, what did you learn? And talk to us about, like, how you've managed to differentiate this from anything else that's in the market? Like, go even further than what you were talking about earlier on today. Like, what began to make you so sure that you had something so unique that it would separate you out from being a normal company and turn you into becoming a potential unicorn?
Yeah, so some of the key indicators and drivers which gave us that, light that we were actually on the right track was the fact that we were able to reduce our speed, of underwriting from 24 hours to 6 hours. That on its own is faster than what current alternatives are able to offer. But apart from that, our non-performing loans are also, less than 1%. So at every point in time, we've never crossed a 1.5%. If you look at other competitors, their credit stop. And this is because we wrote this technology ourselves. We created this framework. Yes, alongside other existing, framework, but we have a unique source in it that allows us to be able to underwrite them more effectively and then determine those that actually would be able to pay back. So today, our non-performing credit is actually 0.25%,
Get
which is
out of here.
1% when you look at it. So
You
it's a
can't
fantastic.
even round it up. It's so small. You have to round it down. It's ridiculous. You can't have 0.0. And how did you do that? Like, how do you have so few? Obviously, look, it's a phenomenal system because you're doing it against products and goods and business and industry and commerce, right? It's not just for the sake of things. So it's wonderfully tied in. But how did you manage to build such a good underwriting system that could be built in such a short period of time? And how long did it take you to do this? Was it an evolution of the product, or did you really discover this quite early?
The first rollout was done within 8 weeks. From scratch to rollout was done within 8 weeks. But we understand that this is dynamic. We continue to train the system. People try to beat the system, but we continue to evolve and put on systems that helps to ensure that we're actually targeting the right people from the behavior of the customers, the patterns of the customer. We're able to track and evolve our own technology also. So this is actually not something that just happened overnight. It's something that, yes, we built the base level, and then we continue to train the system into an automated system that can review the behavioral trend of the customer and also assess the financial capacity of the business to be able to determine what to give and whether or not this is a credit worthy request.
Wonderful. And at the beginning, it was the three of you. And then how did that start to develop after that? How did you start to find other people to come in? And how is that evolving now?
So today we are actually a team of 10. We've been able to attract unique people who have worked in both the financial space, who have worked within the fast consumer moving product space, and also within the startup ecosystem generally. We've been able to attract them, both development team and also our business team, who today are then supporting us to be able to grow. It was quite easy to be able to attract people, and the reason is that we are not just a typical finance service solution. We're actually on a mission to promote financial and social inclusion, and for people who share the same vision, who share the same experience, seeing their moms in this part of the world having to engage in different petty trades and not being able to move beyond that ceiling of their savings. They know how important what we're doing is actually solving a very crucial problem that can create the next 1 million jobs across Africa and the world. So this is one of the reasons why they join us, and they love our culture too. We have a very unique culture within the team that promotes innovations, that promote healthy responsibilities, and for them to be able to take initiatives to move the business forward.
Wonderful. And then, so we talked about how you evolved the team and how you turned the team into a team of now 10 people, which it's growing into. Talk to us about how you're also evolving the amount of money that's being deployed, how you went from that initial 50,000. And 50,000 was still a great sum of money to start with. It's not enough to like make a great business from, but it's enough to get phenomenal client understanding from. And to be able to do that initial amount of money and have such a tiny amount of default is incredible. So talk to us about now, on top of evolving the team, how did you then evolve the amount of money that you were able to actually put in for lending, and how you actually then managed to develop the product as well on top of that?
Yeah, so as we continued to build on what we had, we attracted more people who were in support of what we did, and numbers, as they say, do not lie. Numbers speaks for itself. So today we have financial institutions, the traditional financial institutions, speaking with us. One specifically has opened up line of credit for us to be able to do more for these small businesses. Some want to open up more line of businesses. One is specifically going to be opening up $1 million worth of credit line also
Wow.
to support these businesses. In aggregate, we're looking at almost about 5 million US dollars to be able to on lend within the next 6 to 9 months as we grow, and then move it up to 10 million US dollars monthly disbursement.
Come on, you gotta smile. It was worth the taxi, right? Okay, so then so how does it work? Talk to us about, you take the money from the banks, you're paying them a certain amount of interest, then you deploy that money back out. The money that you're deploying back out is short-term money, which is wonderful because it means that you can actually give good interest rates for yourself that you do really well on, but from the people who are actually taking it, because it's such a short period of time, it doesn't seem in any way onerous. But when you add it up, it works out to be a great APR. Now, I love asking these questions because I know the answers, but I want other folks to hear how you take money that's costing this and you turn it into returns that are producing this. Hit us.
Yeah, so today our average cost of capital does not exceed 2% monthly, and then we give it out at 5% monthly to these customers. When we started out, this was the flat rate, but today we're even getting cheaper funds, which is actually, for example, one of the institutions I spoke about is giving us at 6% annually, which means that we are then able to generate on a flat scale 60% annually on this money. That's quite fantastic. Why some financial institutions will be giving us at about
Yeah.
22% annually, and we're able to generate on a flat rate of 60%. At 5% monthly, that turns to 60% annually.
It's like having your own money machine, really, isn't it? Just go ching ching, ching ching, ching ching, because it's all about the accuracy of the data so that you make the right decision making. Because if you're making the right decision making within a very process driven system, and you're taking money in at 2% or 1% or 1.5% or 0.75% a month, and you're spitting that money out at 5% a month, you want to put as much money into that as you possibly can, especially as it's all been tied into invoicing, trade, commerce, industry. It's fantastic. And then, so how do you then develop? So look, the evolution is wonderful, right? And you must feel so much more comfortable about where you are right now and how you continue to build it up. Talk to us about the future. Talk to us about now what you build this into. How do you evolve the team? What do you do? Do you stay at 10 people? Do you grow more? What then happens within the revenue? And you've already mentioned that you're going to go up to 10 million pretty soon. So then how does that passing that money out look like? Is it to the same people, same everything? Talk to us about what the future looks like for you.
So already we're already preparing for the future, and we're attracting the right set of people to join our team, because we understand that with more funds, more responsibilities to be able to take on those demands. So we're attracting the right people. We're attracting people who have worked in big organizations and managed billions of US dollars in terms of assets under management. We're bringing someone from one of the popular bank in Nigeria to join our team as the chief revenue officer. and she's going to be driving more strategic, goals. But one of the things that we see is, first of all, for 2023, we're going to be doing 10x of what we did previously last year, which is going to translate to over $1 million this year. We're already on track towards doing that. And we strongly believe that once we activate the money that we are expecting within the next few months, we would actually then, grow, into doing or ending the year in recurring revenue to over $6.4 million US. That is quite significant, when you look at it year on year. This is actually going to be on an average of 5 to 10x, year on year growth as we move the business forward. However, in terms of scale, we are looking at scaling into other parts of Africa because markets like Kenya, markets like Ghana are also facing similar challenges. So we want to have a next bus stop within the next 2-3 quarters to be able to expand, into other regions. We're also looking at taking our license operationally, to be, a national-wise license from the state license that we're currently using. So that also would fall in place within the next 2-3 quarters. So those are some of the updates. But definitely we are very targeted, we're very focused, and the goal is actually to be able to provide high returns for our stakeholders.
And forgive me for looking so constantly happy here. I always get like this when I start counting the money that we're going to make from a unicorn which is being built by an incredible founder. You're doing great, man. You're doing just fantastic. You're building the business, you're building a structure, you're building a foundation underneath it. You're bringing in top strong people. This is the key to building great companies. You got to think like a startup, but you got to act like a Fortune 500 corporation. And you are doing that to the T. And everybody who listens to these podcasts knows the formula to building a unicorn is simple. There has been one change this year, which I think is really important and which I think you tick the box massively. But the formula is simple. You find a model that works. You find a willing audience. You hope that that willing audience is going to be large enough to be able to drive your revenue up to a couple of $1 million a month. And then you put your foot on the gas, right? And I think what everybody's hearing is there will never be a shortage of people who are looking to finance to grow their companies, right? Especially as you educate more and more business owners as to the value and the benefits of actually doing it themselves, right? There is no challenges within your team to be able to build out what you're building. I don't think anybody would have any doubt listening to this that you're building out a top class Fortune 500 management team to be able to build out the process to actually take this to the next level. And the technology is already proving itself robust enough. And in the game of lending, is very similar to the game of venture capital. It's a game of belief. So as the banks continue to see that their 2% or 1.5% is coming back month after month after month after month, what do you think they're going to do? Because they love taking our money and turning it into their 1.52% every single month. They're going to be the happiest bunnies on the planet to make sure that they keep on deploying that money. And Trade Lender are going to have more and more and more institutions coming through. And then, so the only thing that becomes really important for this company to make it to that level of unicorn is how do you maintain the integrity of the platform and the technology to make sure that you don't get carried away? And I understand this is a question for the future, but your success is the thing that will take you there, but it's also the thing you have to be so careful of, because while you keep that default rate so low, you are the kings and queens of Africa, no question. The moment it jumps is the moment that there's problems with belief, which means that there's problems getting the 5 million, the 10 million, the 20 million, the 50 million from the lending institutions to be pushing out to do this. How do you protect yourselves from that and the investors and the banks and your consumers so you can grow to be this unicorn level?
Yeah, so one of the key steps, thank you very much, Brian, for that question. One of the key steps that we're taking already is to work with first regulatory wise, so that people, investors, stakeholders are having that comfort. So rather than staying at a state lending license, today we are going into a national status, so that we can be able to have that direct contact with the central bank, and anybody who works directly with the central bank, stakeholders have that comfort that yes, you are actually working on a national regulatory system. Compliance, all those things are things we have our reports, which gives comfort. If today people want to see, it's not typical of most startups, but this is something that we have taken a step extra to give comfort to the stakeholders who are currently working with us. But aside from that, we are also looking at systems that actually ensures the promoter, that's the key man risks of these small businesses that we support, so that if for any reason something happens to this key man of this business, the funds are insured, because that is also another angle which we need to protect our funds, our stakeholders funds, from actually eroding from. So we are looking at that, and that should be in place within the next few weeks, because that's already a more advanced conversation. So the funds are going to be secured, national wise, regulatory wise. We're going to be compliant, working at national level, and at the same time, we'll keep evolving our technology. It's not just going to stay static; it has to keep changing. New, ways are coming in to be able to evolve. We are also then growing into becoming a digital bank for these MSMEs.
Fantastic. And also the people you're hiring are the folks that are at that level that they can make that happen. And normally I say at the end, finish us up with a statement that really reassures investors that you can take this company to that $1 million in recurring revenue for the year within a year or so, to take it to the $2 to $3 million, to the 5 to the 10. But you've just ruined my ending because you just like inspired everybody with how you're going to build out this unicorn already. So I'm still going to give you the chance to finish up, and now you got to top it and make it better. So can you give everyone, look, from my side of it, as always, I'm not recommending anybody invest. I'm recommending we invested, which is why we damn invested, because it's a great company. It's a great founder. It's a phenomenal model. They're doing an incredible execution job. You've already seen from what Ashina has said that he is prepared to do whatever the heck it takes, as is his team, to make sure that this becomes one of the most important financial institutions on the entire continent. And he's doing it through partners. So the cost of acquisition is low, and wait for it, they will make money. So EBITDA aligned with hyper growth, aligned with a low cost of customer acquisition, ching ching, money in the bank. Adishina, I will leave it to you. Last words for you. Please share your email with everybody and just give everybody a goodbye with a little bit of inspiration as to what you're going to become.
All right. So our goal is actually, to, accelerate growth and become a unicorn, within the next 2, 3 years. But before that, I want to tell stakeholders who are listening out there, if you want to make money and at the same time you want to make impact across the continent, especially for those some who have not been to Africa, you want to be able to improve the lives of people and at the same time make money by betting, on the right founders, then you don't need to look any further. We are actually on a mission, to drive financial and social inclusion, and microfinance is actually one of those ways that we can, advance that within the continent. So come join us. Let's make this happen. Let's make money, and at the same time, let's make an impact.
Fantastic. And anybody can also contact me if they want to be connected over, just Brian at expertdojo.com, and I'll make sure I make the introduction. Thank you so much. You're doing a fantastic job. I'm so delighted we invested in you. We're going to make beautiful music. And as you said, change lives while making great financial returns. I don't think there's a better investment than that. Thank you, my friend.